outsized returns, right, are usually very much linked to fund size, right? And by definition, most emerging fund managers, right, have very small fund sizes. I think the second thing that is also true is emerging fund managers, and not only in venture, but it's the same thing for hedge funds and private equity. When you get off the ground, you hustle like crazy. I mean, like you really want to make it happen. The incentive to work incredibly hard for your investors is there, and I've been there. Continue to hustle, but I think like the hustle that emerging fund managers show is incredible, and so I want to back into that.
Another day, another fun episode. Today we had Boris Wertz. Boris is founding partner of VersionOne Venture, and he's one of the top early stage investors in North America. He's a former board partner with Andreessen Horowitz. VersionOne has backed iconic companies like Coinbase, AngelList, Dapper Labs, and Shippo, to name a few. Before becoming an investor, Boris built an online marketplace for used and out-of-print books, and in 1999, he sold the business to abebooks.com. Abebooks was sold to Amazon later. In this episode, we covered various topics, starting from the founding story of VersionOne, how he is able to scale VersionOne from Fund 1, which was 15 million, to Fund 4, which is 75 million, the importance of reinventing yourself as a fund manager to stay relevant, the challenges with portfolio construction, why it's important to get the portfolio construction right, biggest takeaways from his visit in India, why is he excited about the Indian tech opportunity, why he invests in emerging fund managers, and why investing in fund manager is a great investment opportunity, and much more. Now I bring you Boris Wertz. Boris, I'm so excited to have you on the show.
Thanks for having me. Really excited to be here.
Likewise. Boris, you recently announced, or not very recent, but you're onto your Fund 4, which is core fund is 70 million. And then you also have opportunity fund 30 mil. So overall 100 mil. Before we dive into that, maybe a good starting point would be what led you into angel investing and why VersionOne post that?
Yeah, for sure. So former entrepreneur, started a company in 99, Internet 1.0, over a few twists and turns, sold that company to Amazon 2008. And then wasn't quite sure if I should go back to starting something new, operating, investing. I had started angel investing a little bit and want to explore that more, and worked with a few VCs in formal and more official roles. And then felt after 4 years of building my own track record, learning from other VCs, that I was ready to launch my own institutional fund. So I started VersionOne Ventures in 2012. So 11 years in, 4 core funds, 2 opportunity funds, total of about 250 million under management.
Got it. And Boris, from Fund 1 to Fund 4, we'll talk about fundraising from LPs. What has changed? How have you evolved? And we can also talk about the mistakes that you made around fundraising from LPs.
Yeah, I mean, so first of all, what has changed? Like the first fund was about 15 million US, right? The latest fund is 70 million. So obviously, there's almost a 5x increase in fund sizes. Partly because we are now 2 GPs since Fund 3, so there's 2 partners to invest. Partly because fund raises of company portfolio companies have increased. Partly because we felt we wanted to invest more in our pro rata and follow on. So overall, kind of the biggest thing is fund sizes have increased almost 5x from Fund 1 to Fund 4. I think the second one that has obviously changed is just the type of investors we have. Originally, most of the initial fund was raised from high net worth individuals and founders and entrepreneurs out of my network, and really kind of hustled to kind of that fund. There was only one institutional investor that came in at the tail end. But mostly it was private individuals that made that fund happen. Today, we're over 85% institutional capital, 5 core relationships that we have built up over the years between US, Canada, and Europe. And kind of obviously, the profile has changed quite a bit. What has stayed the same is we're still a generalist VC. We've always been a generalist VC. What we change is kind of where we focus. Originally with Fund One, marketplaces and enterprise and vertical SaaS was very much our focus. Today, it's a much broader one, including crypto and climate, plus the bread and butter of still marketplace and vertical SaaS. So I think we're continuously thinking about where we put our focus, and where we spend time. But has also not changed. Still, the clear focus on early stage, so pre-seed and seed. We have never really moved away from that, and really doubling down on these early stages of ultimately placing founder bets.
Got it, Boris. So you talked about we keep, rethinking, reimagining, what sectors to focus on, and you recently tweeted about it. The biggest returns come through compounding effects over a long period of time, but you can't be the same. You have to keep on reinventing yourself. How have you put that in practice for yourself over the last, 10 to 12 years?
Yeah, I think the tough thing is really you're never really quite sure what's next, right? I mean, in hindsight, it's obvious. In hindsight, it's obvious that 2016 was a great time to invest in crypto. Nobody believed in it. There were very few investors. There were very few entrepreneurs. Almost every single project was unique and special, right? But I think the way we think about it is a few phrases we always use. Like one of the things we say to stay kind of in this very early area is like whenever a category is branded, right, you miss the opportunity in early stage. Like the moment you talk about the sharing economy, you miss Airbnb, right? You want to invest in this strange thing called Airbnb without saying like, oh, there's this big trend of a sharing economy, right? And so that's one of the things we're always thinking about. I think another one is kind of at the early stage, you really want to have this kind of absolute optionality. So one of the things we always remind ourselves, if we know how the movie is going to play out, then it's probably just too late for us to invest. It doesn't really make sense. Like I would say lots of the vertical SaaS products today, right? They follow a certain playbook. Everything is very well defined. The opportunities have gotten smaller. But that wasn't the case 10 years ago. And when we first invested in vertical SaaS, people thought, these are too small of a market. People couldn't really imagine how large these things could become. So we want to see optionality, and that you usually get with things that look a little strange, are underrated by the market, are not yet a category, are not quite clear how they're going to play out. And you have to be ready to take those risks that bunch of them won't play out, right? A bunch of them will not work out.
Yeah. And Boris, over the last, years during your funds, has your portfolio construction changed? And also, why having a clear portfolio construction matters a lot?
Yeah. So perhaps I first explain perhaps how we think about portfolio construction right now and what are the things that we learned over the years and kind of we've done wrong. So the way we think about it is that every single portfolio company, as a combination of the ownership you have and the outcome you can imagine, can pay back the whole fund, right? So basically on a $70 million early stage fund, assuming you have a 10% ownership at exit, needs to be a $700 million outcome that you can imagine, right? From experience, we've seen that about 10 to 15% of our portfolio companies are responsible for all of the returns, right? And so if you do 25 to 30 portfolio companies in one fund, 2 to 3 will really be these fund makers, and that gets you really to a 3x if all three kind of get to become fund makers. And if they become multiple fund makers, then you can go on to do a 5x, potentially even a 10x fund, right? But that's what we really think about it in terms of we need to imagine a certain outcome, right? And we need to have a certain ownership, and we need to hit a certain hit rate on the real successes in the company. The challenge is that often what I've seen is people invest, don't have the right ownership. So you suddenly hit a multi-billion-dollar outcome, but unfortunately, instead of owning 10%, you only earn 1%, right? And ultimately, that just doesn't get you to the returns that you need to get to. People have too broad of a portfolio, right? And so ultimately, they are more an index than kind of an conviction bet, or they have too concentrated of a portfolio for the early stage, right? Where it's just going to be really hard to hit an outlier with a portfolio of 10. So the way, as I said, like we think about for us, 25 to 30 portfolio companies, every single one needs to have the potential to be a fund maker. In the end, 10 to 15% of those will be fund makers, and that gets us to a 3x. And then with upside, if one of those becomes even a multiple fund maker.
And Boris, over the years, how has VC investing evolved the past many years? Meaning now there's solo capitalists are breaking out. There's many others. Maybe you can touch upon how the investing world is changing.
Yeah, I think it's a great question. And really when I started VersionOne 11 years ago, it was a very different mindset. First of all, most funds that got raised at the seed stage were small angel-like funds, kind of like VersionOne, 15 to 20 to 25 million. Lots of solo GPs or teams of two, right? Almost all generalist funds, right? And so I think what we've seen in the meantime in the last 11 years, 10, 11 years are three big trends. I mean, the first one is lots of these rather small funds have really evolved into platforms. So think about like the fund that in North America really invented the micro VC category, First on Capital. I mean, they like the latest fund was over $200 million, right? And so that's not a small fund anymore. That is really kind of a large seed platform. I think the second thing that we've seen is a combination of kind of vertical specialized funds together with often solo GPs. So just an explosion of the number of funds that were driven by individual people and focused often in certain areas. And then last but not least, obviously the big platforms, the large VCs kind of moving into seed, moving into early stage investment. So net, way more capital available, way more noise, way more competition. I think when I think about back in 2012, 2013, 14, there was way more collaboration going on between seed funds because seed funds couldn't on their own kind of lead a whole round. They didn't have large enough rounds. So usually you got together with two or three other seed funds. These days, very different scenario. Everybody is kind of trying to lead around, and it's way less collaborative today than it was 10 years ago.
Got it. Seems like India is exactly where North America was in 2012, 2013. Only few institutional funds, a lot of super angels, micro funds, a lot of collaboration, and it seems like it's also a function of where the market is overall. In the long run, we will also see in India where there'll be specialized fund, sector focus, industry focus. Very interesting. And
fully agreed on that. Like when I spent a week in India 2 months ago, that was exactly the impression. Like it felt like North America 10, 15 years ago, right? Where you were just emerging, a venture capital ecosystem was just emerging, right? And much more collaborative with fewer players, etc. But yeah, I think the path will be very similar over the next 2 decades.
I guess I can learn from you and can have an edge, at least some sort of
Hopefully.
understanding. Boris, you were in India recently, and you tweeted about it. You mentioned, the coming decades would be India's decades, and tech would play a big role. Maybe you can touch upon that. Why would you say that?
Yeah, I think I mean, there's some obvious reasons, right? That I think everybody that has looked at India kind of understands, growing population, largest population in the world, strong tech ecosystem, geopolitical reasons, et cetera, et cetera. But I think if I would take one thing away from my visit in India that impressed me the most and surprised me the most is just the amount of entrepreneurs that had studied and worked in the US, right? Saw the startup ecosystem there, and then moved back to India to build something in India, right? And I think the combination of somebody that is like all in on an opportunity, right? But also has like seen how to go after this opportunity because they have worked for kind of some amazing companies in the valley. I think that's a very unique set of circumstances, right? And so I think you have been talking about it many times. The reverse brain drain is a real thing, right? And I had read about it, you talked about it, but then the amount of entrepreneurs I met in India that kind of were part of that reverse brain drain was just astonishing. And I think that is just an incredible recipe for success of the tech ecosystem going forward.
Yeah, I think it'll be a very, very interesting trend to observe in the long run, and it's just the beginning. And also, I think I was thinking about it, and you talked about it. There are two themes. One is India for India, and one is India for the world. And because of, I think, pandemic accelerated work from home or work from anywhere, remote work trend, and now Indians building companies from here. They already have a network in the US who are Indian origin. So it'll be a very interesting trend how that, those two things would connect, and building a company at a large scale, because they've already worked at companies at large scale in the US. So that'll be an interesting trend to see.
Yeah, fully agreed.
And Boris, you have been also investing in other funds. Maybe why did you start investing in other funds? And further to that would be what triggers you, or what do you look for when investing in fund managers?
A few things why invest in other funds, and have about 20 GP relationships by now. It's a great way to give back, right? I mean, I was a first time fund manager at some stage, right? And struggled to raise my first fund. And, I think, kind of now having been a little bit more established, it's a great way to give back and support emerging GPs. I think the second thing, I also think like it's a great investment, right? Emerging GPs, as kind of, especially when they run very small funds with interesting strategies, have some of the best opportunities for returns, right? So I think it's actually a really interesting way to invest your money. And then last but not least, I love learning from other people. And it could be that I invest in verticals where I have no exposure, right? Hardware, chips, or other geographies where I have no exposure. India, for example. Just learning from kind of these emerging GPs, how they think around the opportunity, look at the deals they're doing, etc. So it's really a combination of giving back, great investment, and also learning for myself.
Got it. So, one, why do you think it's a great investment specifically in emerging fund managers? Secondly, what are the few things that you look for when you're investing in a fund manager?
Yeah. So I just think that outsized returns, right, are usually very much linked to fund sizes, right? And by definition, most emerging fund managers, right, have very small fund sizes, right? I think the second thing that is also true is emerging fund managers, and not only in venture, but it's the same thing for hedge funds and private equity. Like when you get off the ground, you hustle like crazy. I mean, like you really want to make it happen, right? And so I think the incentive to work incredibly hard for your investors is there, and I've been there. Continue to hustle, but I think like the the hustle that emerging fund managers show is incredible, and so I want to back into that. I think what really triggers me, and kind of what I kind of my selection criteria would be um, threefold. I mean, the first one is um, it needs to be really differentiated in the market, right? Um, Especially in a busy market like North America. India is a different story. you have whatever 3 or 4 seed funds, perhaps 5 or 6, but it's like ultimately that is more about kind of the country, the ecosystem. Then can this matter per se kind of see the deal flow and differentiate, right? But especially in the North American market, it's like if you don't have a real differentiation, it's really, really tough, right? I think the second thing is then um, kind of more specifically, how do you get your deal flow, right? Because like there's too many that just rely on existing networks, right? And as things evolve, as the market shifts, as network shifts, you need to, back to the previous discussion, you need to reinvent yourself. So what is your scalable way of creating deal flow? And then the last one is like, and especially emerging fund managers sometimes have that challenge, like, do you think like an entrepreneur or do you think like an investor, right? And so these are things like portfolio construction. These are things like kind of, do you feel like you want to be the player or you want to be the coach, right? And an investor needs to be the coach. They can't be the player, right? How do you think around creating outlier chances? How do you think about creating optionality? So really all the things of kind of an investor at an early stage. How do you think about that opportunity? Are you ready to learn that? Have you learned that because you worked for a fund beforehand, or are you ready to learn it by just kind of reading up on it and having strong mentors, etc.?
Got it. So you always thinking about reinventing yourself and also spotting opportunities that are not obvious yet. And my sense is, that could be one of the reasons you ended up coming to India for a trip. And seems like you are interested in learning more about the market and then eventually start investing. Uh, let's say I'm an Indian founder raising capital. Uh, what would what is Boris VersionOne looking for that I would be a good fit for Boris and VersionOne?
Yeah. So our general investment thesis is backing mission-driven founders at the earliest stages, right? So we really look for founders worldwide, not only in India, that are incredibly passionate about solving a specific problem, right? And they're taking the long-term view of solving that, right? They have like this incredible ambition, hustle, patience to really solve that problem. So I think that's the core, right? We do that only at pre-seed and seed, so we want to take founder bets, right? We're not people that look for traction and a product in the market, etc. We really take a founder bet, and then we're looking for things where we feel like it's early in a wave, right? And obviously, kind of when you think about the two opportunities in India, for India, it's relatively clear it's the build out of kind of e-commerce, D2C, fintech, healthcare, education for India, right? All of those verticals, and then India for the world. I think the question is really, as you compete in a worldwide market, right? What are big trends that are at the early stages, right? I think everybody obviously thinks about AI right now, and it's definitely a vertical that we're super interested in. But the question would be on AI, like what is the non-obvious, kind of strategy in AI? What are, for example, AI native applications that nobody has really thought about right now versus just use cases that already exist where there's already tons of incumbents and you trying to now go after that with AI, but pretty much the same similar use case.
Got it. This is helpful, Boris. And with this, my co-pilot is getting a little restless. Uh, he wants to get in, and so he's asked me. Actually, he never asked directly. So he's asking me to ask you, what's your day like, Boris? Starting from waking up to going to bed.
Yeah, literally every day is a little bit different, right? Because I work from home. There's no office routine but I just generally usually wake up at 6, work for an hour and a half, just doing all the emails, go for a run every day, roughly half an hour, take the kids to school, and then I usually have meetings, new entrepreneurs that we meeting, existing portfolio companies, board meetings, general catch-up meetings, to about kind of I would say nine to 3. Pick up the kids from school, and then after I come back, usually another uh, kind of 2 to 3 hours of emails where I just catch up on emails, and then dinner with the family, and then after that, kind of hopefully some family fun. Um, but that's roughly kind of my day. I travel quite a bit. I'm on the road, every 2 to 3 weeks. I love meeting people. Vancouver, where I'm based, is a relatively small tech ecosystem. So ultimately, I need to kind of get to other places to meet more interesting people, and learn. So that's certainly a part of a big part of my routine.
Yeah. And Boris, you've mostly lived in Vancouver and you've been investing in US since the beginning. Do you think living in a smaller ecosystem gives you an edge?
But yes and no. I think there's like in any scenario, there's like the kind of the good and the bad, right? I think the good of living in a smaller ecosystem is actually it really helps you um, have a little bit more of an outsider thinking, a little bit more independent thinking. It's not the echo chamber that the Silicon Valley is, right? And so I think that really helps kind of formulate that independent thinking, which is especially important at the early stages. Having said that, right, um, lots of venture is about learning, meeting new people, meeting entrepreneurs, running into people, like all of these relationships and that you develop, and that's hard to do in a smaller ecosystem like Vancouver, obviously, right? And so, um, coming back to my previous point, the way you fix that is you unfortunately have to travel quite a bit. And I spend systematically lots of time in San Francisco, in Seattle, in New York, in Toronto, besides kind of Vancouver. And you just have to kind of do that work of traveling to kind of account for the negative effect of being in a smaller ecosystem.
Yeah. In my early years, I worked with Howard Lindzon, and he works out of San Diego. So I always thought, because conventional wisdom is you need to be out there where the action is, and his viewpoint was very similar to yours, where actually living out. It helps you live outside the bubble, and it also helps you think independently. But with that, he used to travel as well a lot, like just like you. And Boris, what are you most obsessed about outside of work?
Um, Fitness. I love running. I've really picked it up again 10 years ago, and started first road races, then triathlons, then trail races, and I enjoy the physical activity on a daily basis and getting better in it, despite age not being favorable to race performances, but try to get better in running and faster. That's certainly something I'm obsessed about.
And has this been since a very long time or a recent thing that you got into running and fitness a lot?
No, I was a runner when I was a teenager and in university, and then like when we started our startup, and then when we kind of later on with kids, I think I just didn't have enough time anymore, and so that was a real break for a good 15 to 20 years where I didn't run that much, and then I got into it again at around the age of 40, right? And so it was fun to really get back into it for something that I had done quite a bit when I was kind of a teenager. and in university.
Got it. And Boris, if you were to pick one or two experiences, and it has to be outside of work during your trip in India, it could be around food, it could be around places that just fascinated you.
Yeah, I mean, I think the um, I traveled quite a bit in Asia, right? And I think Asia in general is like one of those incredibly rich experiences, and all very diverse. I've been from Tokyo to Beijing, Shanghai, just recently India, Bali, Bangkok. So I've seen quite a bit, but I would say all of those. I think street food markets is like one of the experiences I find so pure, so interesting, so exotic. I just love it. And it can be in you find it in obviously many different Asian cities, right? So that's probably street food in Asia is one of the like experience I would always call out. I think the second thing is um, an evening in Southern Europe in summer where everybody hangs out at the plaza, right? The square, the town square. And it's like one of the most social experience you can see where families hang out, kids playing soccer, kind of everybody laughing, having fun, drinking a beer, drinking a wine. It's just like in terms of condensed um, social activity, like there's nothing better than that. So it's like very general, like the social experiences around town squares in summer in Southern Europe, and kind of street food in Asia. I would say like probably two of my most interesting experiences.
Got it. And Boris, this one last one. If you could invite three people, dead or alive, can be from any industry, for a dinner, who would that be and why? And Alfonso is going to be the chef.
um, so I would pick. I would probably pick the following three. First of all, Fred Wilson, who is the one of the founding partners of Unisquare Ventures, right? And he has been my mentor for the longest period of time. Uh, he used to blog quite a bit about venture capital, right? And while I never worked directly with Fred, I would say I like he was really my mentor, and like I learned venture from him, and it would be amazing to have him around the dinner table. Um, I think I would invite Elon Musk because I think he's just like the most ambitious, visionary entrepreneur, right? Um, and then I would probably invite Taylor Swift because I think she just has like such a, as an artist, such a like created such an appeal to such a broad audience that is just something that would be super fun to learn more about. Now, the big question is, would they all three get along? I'm not sure about that, but I certainly would love to have a dinner conversation with each of them, and kind of both in terms of looking at the past with Fred Wilson, like having been my mentor, and then two that really master their art and are top performers in their field, Elon Musk and Taylor Swift.
Got it. I think they would get along. I'm not saying that. Alfonso is saying. He say, "I'll take care of that." But I did. I watched Taylor Swift's documentary. I think on Netflix. It's crazy how obsessed she was about her art. And it's definitely one of my favorite activities. Boris, thank you so much. I had a lot of fun. Thanks for doing it. Really appreciate it.
Thanks for the invite. That was great fun. Thanks for having me, and yeah, continued success with your podcast series.